this is like both rage bait, and I actually believe this. I think that Michael Saylor is behaving like a rogue trader. And I think that he will absolutely blow up, as will all of these other SPVs. And when he blows up, Bitcoin is going to be down bad.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
All right, guys, welcome back to another 1000X podcast. It's been an eventful weekend. Basically starting last Wednesday with a little rally up from that 93 to 96. We peaked out at 98. Now we're sitting at about 95K. Equity markets are holding up okay today. You know, looking down 30 bips, but not a big deal. But the real story of today is gold. I mean, gold is up 3% today, which is kind of nuts. It seems like people are crowding back into that fear trade. I mean, we had that really sharp sell off. We hit 3,500. We came down almost 10%, and now we're off the lows up decent amount, 5-6%. But it looks like fear might be slowly creeping back into the markets, and I'm curious as to your take here, Jonah. Is, you know, have we hit all of our targets? You know, the bullishness that we expressed 2 weeks ago on that podcast and then celebrated last week. Are we done? Is it time to step away? You know, like, if you bought extra, are you supposed to be completely out? I said chip out last week. Are you supposed to be completely out this week?
It's a great question. I think over the short term, if your time horizon is like a week or two and you're like super actively trading, yeah, I'd be concerned. I don't like that gold is up either. I think the equity markets have topped out a little bit. To me, you know, I think that there was peak fear priced in when the Trump tariffs first hit after Liberation Day. Then he reversed them, telegraphing a willingness to be reasonable and markets focused. And I think that now we're at the equilibrium level for that, if not sort of like a bit optimistic, because now markets are pricing in like a fairly benign resolution to all this, which is still very much anyone's guess. So with gold ripping, you know, I'm concerned about equities. I'm not an active equities trader because I don't believe in going head to head with the sophisticated Ken Griffin type players who I've observed in my TradFi career. Like, I don't think I have an edge short-term trading equities. So I'm basically just mentally preparing myself for another big drawdown on my stocks. In the short run, I think it's notable that Bitcoin's up today with equities down. You know, equities have been up, 9 days in a row, right? You can't rally forever. We got to have a pullback at some point, and Bitcoin is disconnecting again to the upside. So I'm less concerned about Bitcoin. I do think there's a massive put under the market. One other feature, Avi, that, you know, I want to get your take on. Destined. So in the crypto executive order, in the strategic Bitcoin that was talking about the strategic Bitcoin reserve that we all got so excited about, you know, back when Trump first took office, Scott Bessent's deadline to deliver a kind of like a manifesto or a game plan around that is due today, May 5th, right? So maybe it's not getting a lot of press, but like something's going to happen there. Bitcoin's trading more like gold, less like stocks, looking good. Basically, in response to your question, I'm less worried about crypto than I am about equities, which could get dicey. What do you think?
Yeah, with Bitcoin, it's interesting. It's like trading, it's like a mix of gold, and it gets strength from both sides.
Yeah.
I think the middle ground tends to be the worst for crypto. It's when you're facing, okay, well, we're not really sure if gold should be up or equity should be up. I mean, there was a period post Liberation Day when we're like, okay, shit's collapsing. The question is, how far does it collapse? So you have that direction, and then you have the, okay, we're on recovery mode. Things don't seem as bad as they are. Gold's going down, equities are going up. You get that for 10 days, and I think crypto does tend to do the worst during these periods of I have no idea. because people tend to not really want to allocate money to high vol assets. Although Bitcoin vol is actually pretty reasonable even now compared to equity vol, which has been a welcome surprise. There's been some compression there. But yeah, I mean, I think if I'm looking at crypto, it just goes back to what we were talking about for the previous weeks, where we're having specific outperformers in this market that are directly due to the fundamentals of these assets. So you're looking at Hype, you're looking at Tau, you're looking at Curve, all of these things that are doing, Monero, you're looking at these things that are doing really well because they're actually good assets, accumulating real users and revenues and usage. And I think that continues. And so, my one thing that we haven't talked about in a while is ETH BTC, but ETH BTC is showing signs of life. I'm still personally giga bearish on ETH, so I still personally like to buy the hyperliquids and Taos of the world and sell the ETH trade. But it is at least promising that we're getting some real outperformance here. And if you look at the broader market, a lot of things still aren't up, right? It's actually very specific assets that are up. There's still a lot of assets that are down substantially. Yeah, from when equities bottomed out.
Tau just does not go down. I've been wanting to accumulate more of that, and I've been waiting for a dip. My big dip buy, thanks to our conversation, was Hyperliquid back on the lows, but I didn't really buy any Tau. I was like, well, it's going to keep chopping. I'm going to get something. It's just up like 3 to 8% every friggin' day. It's so annoying for me. I'm really missing the boat on that one, and I don't really understand what's going on there or why, other than just a general positive narrative, which I hate buying into if there's no underlying like cash flow that's occurring. But I know there's some cash. We'll talk about.
Yeah, I mean, there's usage, but there's no cash flow.
Yeah, I don't know. Subnet 16 is the biggest decentralized Bitcoin miner, but is it profitable? I don't really understand. I don't know how to track it. I'm still getting smart on that ecosystem. I don't want to go in on a size that would, even if I miss the trade, I'll still feel okay about it, because I don't like piling in on things that I don't understand well enough. And Tau is still kind of a mystery to me. I'm still getting smart on it. As for broader crypto though, yeah, you mentioned ETH. 3 consecutive weekly green candles is the most that's been put in since like 2021. So I'm watching that ETH BTC chart very closely. I think if we get 4 green weekly candles, maybe technical voodoo suggests that it's bottomed out. I know the Ethereum Foundation has maybe.
I don't know, man. I mean, ETH is just so good at faking people out. I mean, what I will say is it's down so much that you could get a 20% rally against Bitcoin, which would bring it up to a level that it was just at in March, at which point everyone's probably getting out. I mean, I think they're what I call these perpetual shorts in crypto, that you just have to find. Basically, you have to find the right entries so you're not completely squeezed out of the position. But whenever it's up, 20 to 50% off the lows, you just short the fuck out of it again. ETH is one of those, and it has been one of those. WorldCoin is another one where it bounced to. I think it last 2 weeks ago it hit 120, and that was 60% off the lows, and you're like, all right, time to re-enter this position and try to clip another 30-40% when it goes lower. Move is another good one. I mean, there are a lot of these just complete and utter shit coins that you wait for a weekly candle or 2 weekly candles of outperformance, or you wait for 30 to 40% off the bottom in ETH. That's going to be a little bit less, and then you just reshort the thing and you make money. I think TIA is probably going to be the same type of trade.
Celestia. That's hilarious. Perpetual shorts.
It's just because it's just and what's crazy is because they're bag holders in crypto, and because they're people that don't that love to speculate, and they'll just buy things that in crypto, people will just buy things that are down because they're down and the chart looks good. and those guys are never going to hold. So you just have to wait for those people to get what looks like a good trade out of it, and then they're all gone, and then it's back to the VCs dumping on your head. I mean, we can make a whole list of this. Whiff is probably another one that is now in this trend.
Yeah.
That wasn't before. ICP can be a good one here. I do want to note that you don't want to do this when Bitcoin is pushing all-time highs. Like, you don't want to do this in a euphoric market, right? Like, you don't want to do it when there are a ton of animal spirits. You do it when you're kind of in this, this is the perfect market to do those things in, right? When you're chopping around a little bit. Like, as long as Bitcoin's between 109 and 80, like, these perpetual shorts will work. And then, once it breaks out, maybe wait for them to reach their all-time highs and then short them again, or but I do think these things are all going to zero, which makes me happy because it gives me sources of alpha.
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Agreed. Inverse alt season. I mean, one of the nice things about ETH is that, unlike some of the other coins you mentioned, the FDV is just humongous. Like, it's still a $220 billion asset. Like, there's a lot of blood that can still leak out of this dying carcass, right?
Mm-hmm.
I think some of the smaller coins, you start to get into danger territory if the market cap drops too low, and then you can get squeezed. But like with ETH, even if all the short-term traders are out and the bag holders are disillusioned and out, there's still like long-term holders who got in with a cost basis of like 10 cents a token. It's trading almost $2,000 a token, and they need liquidity to fund their wedding ceremony or buy a house or a car or something. And there's just this endless selling and no fresh investment. So I like the idea of the perpetual shorts.
Yeah, I 100% agree with that. It's also, I think there are a lot of people that haven't given up on ETH still. There are a lot of, I still get messages from, what I'll call crypto adjacent people. They have 5 to 10% of their portfolio in crypto, and they hold ETH still, right? Like they haven't, in my opinion, adjusted to the new world where ETH is losing out. And it's just been around for so long. It takes these things a long time to die. I mean, Staples is what I was thinking. Staples, it took a long time for Staples to go away, right? There's a lot of inertia, that these types of projects can coast by on. But I do think eventually, we're sort of out. The jury. Sorry, what I'll say is the jury's no longer out on ETH. I think the jury's said guilty, and we're trending lower. So when it comes to trading, I'm still in the very nimble mindset. It's like, okay, well, you have to pick your spots, but I mean, Bitcoin's looking good. I'm hopeful. I think that there will be a pullback in equities just because, this sounds silly to people that don't trade. But there's a lot of psychology that comes into trading, even equities when they're this volatile, because it's kind of all you have to go off of
Yeah.
is, psychology and emotions. Because the fundamentals, I mean, you can't tell me that the fundamentals of the equity markets were down 30% and then up, 20%, and that was all rational, pricing happening in real time. That's just very clearly not what was happening. And so when you look at the chart, this area, this 480 to 490 area was sort of that was like the little bounce that you had, where a lot of people, I think, piled in hoping that, okay, this is it. We're off 20% from the highs, or sorry, 10% from the highs. Maybe we can start buying now. And I think they got trapped. And so I do think that there's a lot of selling to work through here, because people still aren't really sure. I mean, we're not really sure how these tariffs are going to impact, the market. And what we're seeing, at least, is we're seeing hints. There's this great clip, where basically it's really funny. They're debating the tariffs. I think it was like CNBC, one of those roundtable shows, and they're going, well, GE came out and said they're not going to pass on the tariff cost to the consumer. They're going to eat it all out of their profits. So they're going to go down from 15 billion net profit to 10 billion net profit. They're just going to eat it. And GE, has apparently come out and said, or sorry, GM has apparently come out and said that they're gonna do this, right? They're gonna eat the costs. And then suddenly the other side of the table starts going, well, isn't that and it's sort of a Republican versus a conservative, and a Republican versus Democrat, and the Democrat starting to go, well, isn't what's bad for the corporation bad for the consumer, bad for the average guy? The Republicans like, sounds like a Republican talking point now. It's like people are flip flopping all over the place, because I say that point just to illustrate nobody has really any idea what to even think, or how to trade this. But we are getting some indications now that companies are going to eat a substantial amount of the cost of these tariffs, and they're going to try not to pass it on to the consumer, which obviously would bring valuations lower, right? Like quarterly earnings are gonna be revised lower, and so I do think that maybe that adjustment has happened, but I don't think it's fully happened yet. I mean, maybe we can go down another 10% here, and then we start the current rise up. I do think a lot of it also has to do with time, right? It's always about time as well.
Yeah.
I don't know. What are you thinking?
No, I think that's a really good take. Let me just try to build on it. I think basically what the big jackknife move lower in stocks was about when the tariffs first got announced was the global investing public reevaluating a post-global financial crisis thesis, which has been the government wants number to go up, right? The government wants risk to be mitigated. The government has basically sold a gigantic put to the investor. The government has provided a free put to the investor, right? And then when Trump came in and made noises that were market unfriendly noises, corporate profit unfriendly noises, I think everybody was like, oh my God, are we about to eat like 3 crises worth of medicine and go back to the lows of 2008, because we now have a president with almost unlimited power rewriting the rules and rewriting that particular number go up kind of game. And then when he flinched and did listen to the kind of the calmer voices in the room, and those voices prevailed, and he did the 90-day tariff pause, I think that the markets repriced to a level that says, hey, actually, The government still does want the number to go up. The government still believes in a stronger stock market, believes that higher equity prices equal American exceptionalism for the most part, and they're not just going to go ahead and punish the little guy. The big puke down to the lows in equities was when the market thought that the government may no longer care about equity prices. When it was like, oh, the working man doesn't own equities, so we can take stocks wherever we want, and our base will be fine. When that got basically when the 90-day pause happened, that's when investors around the world realized that the government does want number to go up, does care about equity prices, does believe that American exceptionalism involves, corporate earnings growth, right? So now basically stocks are trading around an equilibrium level where tariffs are creating uncertainty, but the put is still there. The government has still provided a put to the investor base. And that gives me a lot of confidence. So basically what I think, I do believe the put is still there. And I think it will be there until somebody gets elected into Trump's seat on a redistributionist agenda, like a Bernie Sanders type character. Until that happens, I think even in peak panic, you'll see politicians flinch and backstop the market. And even Trump did. So here's what I'm doing. In the scenario where what you just said plays out and volatility and uncertainty take equity markets down another 10%, Bitcoin's crashing, everything's down except gold, I'm going to be buying Tau with both hands. That's my chance. If markets kind of like stabilize around here and just chop, I'm going to be leaning into your perpetual shorts thesis and looking for spots to short whiff, ETH, TIA, anything else that's just total vaporware. And if markets take off, happy days. I've got enough skin in the game right now that I'm going to feel okay about it. What do you think of that plan?
I think that's a good plan. I think that, I don't, maybe we can talk about this for a second, but at least in the short term, we got the move back, to this level in equities. We almost tapped 100,000 from BTC. We got a ton of good news that's come out. I'm not really worried about a sharp move short term. I do think we're probably in the digestion phase. There's a lot of stuff that's come out recently about Bitcoin and MicroStrategy's headline of raising $84 billion to go buy Bitcoin, and this Cantor Fitzgerald, they're really leaning in to crypto. I don't know if you saw there was a SPAC that just went live, the Republic Digital Opportunity something organization, or what
Cantor,
else?
Tether, SoftBank, they're all ganging up to buy Bitcoin.
Right. I mean, everybody's coming together now in this moment to basically telegraph to the world, hey, we're going to be investing a lot in crypto. And guess what? We're probably going to be buying a ton of Bitcoin direct. And guess what? We're going to be expanding the influence of crypto throughout the world. And we're some pretty large influential players. It's all in the process. And Bitcoin is not at all-time highs. And that, I think, tells you a lot about the exuberance that was baked in because of the potential SBR. I think it tells you just how many people, how many billions and billions and billions of dollars were invested trying to front run the government. But what's interesting is that, these steps, I think, actually do make it more likely that SBR happens at some point in the future. But also, these guys are telegraphing buys as well. I do think what's going to happen is it's going to take a little bit of time to digest. I think, once the first dollars really start to hit, if Cantor comes out and says in their $3 billion raise, okay, they bought some Bitcoin, and now they're doing now, once they do like a secondary raise, Bitcoin's at like 115 in my mind. So I think it's just a matter of time, which is why, I liked the calls when we were at 85 because I thought that we could get a sharp move very quickly. Now I think it's a little bit more headline dependent, whether we go up or not. It's not necessarily a natural reversion. Like I thought 85K, this is way too low of a price given everything that's happened. There's going to be a sharp move that corrects this. At 95, it's more, okay, well, we've got all these great headlines and that's what pushed up the price, but now we need some follow through. And so, I'm basically no more calls, no touching any calls anymore. Vol's probably fairly priced, but spot BTC is a good place to hang out. I am a little bit lighter on exposure. If I was at 85, if I'm 100 out of 100 bull, now I'm a 80 out of 100. I'm not saying let's go short the market, but I'm saying it's good to have cash again, because I think that we could gyrate for a bit and be great to buy Bitcoin at 90K again, right?
Yeah.
I think you have to predict those environments where you're going to get a chop, and I think that's one thing that I've been reasonably good at, is post a move trying to predict where you're going to get chop, and so then stepping back a little bit so you don't get blown out of positions. And I'm trying to predict that right now, that in the next week or two there's going to be a bit of chop. And so if you're not, for those of you in big positions, maybe trim it down, and for those of you not in positions, don't rush in.
Yeah, I agree. I think that
my not financial advice.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
None of this is financial advice, luckily. And it never will be. We're even going to record. I was talking to our producers. We're going to record a little clip at the end of the show to tell everybody that it's not financial advice. So that's coming soon. That's on our roadmap. In the meantime, I agree with you that if we just sort of like traded from 95 straight to 100, I think it would have been an air pocket up to 110 in Bitcoin. But now I think that it's going to be kind of a rock fight to get to 110K. I think it'll keep chopping. So basically, like you mentioned headlines. The headlines that have come out in the last week would have been a dream come true for us in 2021 or 2022. It's like SEC has, I've just compiled a few here. The SEC paused crypto enforcement, dropped the PayPal PYUSD stablecoin investigation. They also dropped a bunch of other lawsuits recently, including against my former employer, DRW. Tether plans a US dollar pegged stablecoin launch in 2025. Federal Reserve lifts its bank restrictions on crypto and stablecoin activities. The one you mentioned, Cantor Fitzgerald, Tether, SoftBank, $3.6 billion Bitcoin buying venture, SoFi to resume crypto investing in 2025, citing favorable regulations. NVIDIA talking about, they're going to have a vote to see if they want to add Bitcoin to their balance sheet. Freaking crazy, crazy, crazy stuff. And against that backdrop, the best performers of the last week since we last podcasted have been Virtuals, Hyperliquid, Monero, Aave, Maker, and Tau. So I think what that tells you is we're basically entering a zone where the market is telling you what is going to which alts are going to perform on this next sort of like deregulation cycle in crypto, it's basically RWAs, on-chain, DeFi, yield-bearing stuff, and AI. That's where you have to place your bets for the next leg higher. I think that's kind of like the market's already giving you like tea leaves to read to pick your next trades.
I said 100%. I'm actually seeing specifically on AI, which is kind of interesting. We're getting hints. I mean, one of the things that may or may not be driving this BitTensor rally that isn't necessarily talked about a lot is that there are some rumblings and rumors about a trying to spin up MicroStrategy like companies for other assets, and BitTensor is one of those assets that people are trying to spin up. Spin up these entities for. I do think that this game is a little bit weird because it's kind of like a backdoor. It's a backdoor into an ETF. One thing that growing up in crypto and you in oil probably understand deeply is just the level of like how much money is made via regulatory arbitrage is kind of insane to me, and like how much opportunity there is in regulatory arbitrage is pretty nuts. I mean, that's kind of the entirety of crypto if you really think about it. From the beginning, it's like you're building this alternative financial system outside of the rails. Therefore, you're subject to none of the rules. Therefore, you can build things in a new and less complex way. And then the rules come on later, but you've already cut out all the fat. And so it's like, because you didn't have to play by the rules, you were able to build a better system, and now you kind of are the system, which is great. But yeah, I mean, I do think that one thing that this market is becoming a lot harder for your average retail investor and just for your average trader, because there are so many things that kind of happen behind closed doors now. I mean, if you had advance notice of this Cantor Fitzgerald thing, maybe you could have put on some trades. And these aren't necessarily, it's a legal gray area because Bitcoin's a commodity, and if somebody's putting together a deal to go buy Bitcoin and you hear about it and maybe you get a deck, it's like, well, I don't even know if it's getting done. So yeah, you can technically buy Bitcoin and you're not breaking any rules. But I will say that the embrace of crypto by this administration is making it, I think, harder for your average person to trade Bitcoin, which is kind of.
But it's making it easier for them to invest.
In equity markets. Yeah,
it's making them easier
to invest. But like the trading, right? Like everything that we do, the actual trading. I mean, think about it, right? Why does your average guy not trade oil successfully? It's because people like you at VTOL were sitting there with 300 times the amount of information as your average person on the street. How could they ever possibly compete with you? Unfortunately, that seems to kind of be happening in this space, which again is why I gave a shout out on the last podcast to all of the research providers, because without them, I'm completely lost in the sea of noise. I mean, basically, you just need to be reading 24/7 and networking 24/7 and talking to people 24/7. Otherwise, you're just left in the dark about everything that's going on, and then it's very difficult for you to make any money. But that's also why hopefully you listen to this podcast, so that if you listen to this podcast, one of the reasons BitTensor is doing well is because people are trying to spin up these companies.
That's what we're doing, Avi. We're making it easier for people to trade, hopefully. But we're not providing investment advice along the way, obviously. So let's talk about, you mentioned a bunch of stuff there that I want to like kind of zoom into. I think one of the most interesting things is like, just the idea of Bitcoin being harder to trade, but easier to invest in. I think the flows are kind of telling us that story. Like if you look at the ETF flows in Bitcoin, it is absurd. It's like May 1st, 422 million, May 2nd, 675 million. Like the inflows are just incessant and just like unstoppable. Meanwhile, you look at the ETH ETF, like this looks like a stranded asset. Like 30th of April, 2.3 million of outflows, million. 1st of May, 6.5 million inflows. 2nd of May, 20 million worth of inflows. Like these are rookie numbers, right? So Bitcoin, I think what the flows tell you is that people are just like, there's a gusher of flow into Bitcoin and very little else. And as far as what you mentioned about Tau and the, sort of SPV like vehicles that are getting spun up to invest in Tau, I'm worried about those, right? Like I don't think there's any real business backing those coupon payments that need to occur for the debt that's getting raised or even the equity. Like it's just vapor. It's basically like a way for people to bet other people's money, and they're going to get liquidated. They're going to get stopped out. It's going to end badly. So I guess my biggest fear is that Saylor gets liquidated, and he always will, right? This is like both rage bait, and I actually believe this. I think that Michael Saylor is behaving like a rogue trader, and I think that he will absolutely blow up, as will all of these other SPVs. And when he blows up, Bitcoin is going to be down bad. And I guess the big question, I want to ask this, I want to put this ball back in your court, Avi. If he, like, let's say that there was no Trump put under the market, and let's say equities trade down 20%. He's blowing up this year, and Bitcoin's going to get, like, John Ray is going to finish up at FTX, take over the MicroStrategy bankruptcy, and liquidate Bitcoin all the way down to 10K per token, right? But if we get another like 2-year bull run before, and Michael Saylor keeps buying and buying and buying, and then his average price is like 175K, and we get liquidated from he gets liquidated from that level, maybe the market's trading from 250 down to 150. I think the latter scenario is more probable, but I just there's no rogue trade in the history of Wall Street of this size that hasn't ended in absolute tears. The only question is does it end in tears from current prices or from some astronomical future high price? And all these other SPVs too. What do you think?
I mean, the one way that we get out of this is that he stops buying. Like that is literally the one way that we get out of this, is that he just says, okay, I've accumulated almost 600,000 Bitcoin. I'm going to stop buying now, and I'm going to keep my average price at 70. And so then when Bitcoin hits 140, it's really, 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 really easy to refinance that debt, right? Like that's kind of the only way we get out of it without him blowing up. And I know people really hate this because it's true. But yeah, I mean, at some point it's going to come spiraling down unless he stops buying. He can't. I mean, almost definitionally, if he keeps buying and he keeps buying at the highs, which he loves to do, he will blow up. The only way to stop him from blowing up is to not buy. I am really, really, really looking forward to, by the way, if Cantor and all these new MicroStrategy lookalikes figure out, and I think I said this last time, but I really need them to figure out that you buy Bitcoin when it's down. Imagine the strength that Bitcoin would have if every time it went down 3% on a day or 2% on a day, that's when they bought.
Imagine
it was up.
I mean,
right?
Dude,
imagine that would be the best fucking thing on the planet if there was a literal plunge protection team on Bitcoin, and instead there's just chase the dragon.
It's insane. I mean, basically
buying a ton of Bitcoin, pushing up price. Don't get me wrong. I'm very grateful to Michael Saylor for everything that he's done for Bitcoin. But my advice to you, Saylor, if you ever watch this podcast, is stop buying. Stop. You need to stop buying so much fucking Bitcoin.
Oh, that's good rage bait, Avi. That is good rage bait. I mean, look, how about this? If any of our listeners know Michael Saylor or any of the people who are running any of these SPACs, send this podcast to them and tell them, buy when it's down, buy low, sell high. And you know what? Or don't sell high, just buy low, don't buy high. And I think maybe we'd be in a better place. The most hilarious thing about all of this, Avi, is that Michael Saylor is running the exact same playbook as Three Arrows Capital. except instead of borrowing from retarded lenders like Voyager and Celsius and Anchorage and BlockFi, he's borrowing from
And to be
slightly
fair,
more sophisticated people.
To be completely 100% fair, Jonah, they're also Saylor's doing it with a better asset base because Bitcoin is a great asset base. I love Bitcoin. Like Bitcoin is, it's like if you're going to do it at this with any assets, you know, maybe do it with equities, do it with Bitcoin. Don't do it with like AVAX, right? At a 50% discount. I mean, that just doesn't make sense.
Luna. But it's the same playbook.
Luna.
It's the same playbook as he is the Suzu of this cycle, except he is like you said, like he's got more to work with than a bunch of like locked Avalanche and GBTC that's trading at a massive premium. So honestly, like he scares the living daylights out of me, and this is not going to end well. That is the number one concern that I have. You know what would be the epic trade, Avi? The epic trade. Scott Bessent, in an attempt to accumulate Bitcoin for the SBR, like works with the DOJ to just target, like find something wrong with MicroStrategy and just like send them into a bankruptcy spiral, like in a targeted way, the way he broke the Bank of England, and then accumulate all of that Bitcoin for the American public out of bankruptcy. I don't know if he would do that, but imagine. Imagine if he just went after all of these SPVs and MicroStrategy and just like apportioned their Bitcoin. It's like it's possible. I mean, that unlikely.
That would be pretty sick.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets.
I think we've probably enraged enough people by now. Maybe we should say something nice.
Yeah. Saylor's great. He's really helped the ecosystem.
Really sent up prices a lot. Anyway, it's what are you up to, Jonah?
I'm just
for today. Anything you're diving into?
Probably gonna watch Frozen again. My daughter saw it. She got a cold, so we decided it was okay to put her in front of some Disney for a while. She saw Frozen, and now that's all she wants to talk about, think about. So okay. I'm basically got the soundtrack memorized. Probably gonna watch Frozen again today. What do you got going on, Avi?
All right, well, enjoy. I'm gonna hit the gym after this. And nice. Think about all the things that I've done wrong in my life, to the point where I had to spend the last 10 minutes yelling about Michael Saylor. Thank you guys for bearing with me while it happened.
At least you can go to the gym. I would like to, but my shoulder went out. Yeah. Why? Because I'm 40, and that's just what happens.
Not yet.
I'll have to. That's true. I'm still 39. I'll have to wait. Anyway, it was great talking to you, Avi. I loved it, as always.
This was awesome, Jonah. We'll catch up again soon.
Until next week. See you soon.